Mikey's Tasty Treats. These are the costs for the year ended revenue here. For the year ended December 31st, 2008. S&A, office rent, and commissions, direct labor wages, direct material purchases, direct materials inventory beginning and ending. So what's happening here? Cash, I'm not going to be able to completely do this, but look at a couple of these. So for raw materials, what happened? Well, beginning balance in direct materials was $68,000. What happened during the year? Well, they purchased $568,000. An ending balance, $76,000. So that means that whatever we had to take out of here to get to 7668 plus 568 minus 576. That was the raw materials that went into work in process during the year. And we go down. Or no. The direct labor wages at $675. That would go into work in process. Okay. Well, no. So direct materials we can figure out. We just have to calculate the balance. Wages, we just have to look for, well, what's direct labor? Well, direct labor, those that have their hands on it. Well, this little example completely tells us direct labor. What that means is that it's not wages for accounting department salaries. It's not even wages for the production supervisor. Production supervisor doesn't have his hands on the product. So it's not considered direct labor. But the production supervisor is involved with the making of these tasty treats. So we have this other component that we need to have in working process, this overhead. Well, we have a lot of costs here. So which ones are overhead and which ones are actually S&A expenses? I'm going to tie it up. This is great. Here's our Mikey's Tasty Treats and all these costs. Well, we said we pick out easily that this is direct labor and that these here were related to how we figure out direct material. Well, we need to know then what pieces went into supporting the production. Those items, those costs that are related to supporting production are overhead. What's going to happen? Our cost object is our product here, the tasty treat. We're trying to figure out the cost of a tasty treat. Well, that means we need to know what went into it. Well, direct material went into it. That's obvious. We had to get the flour, the sugar, and all that stuff to put in there. We can directly trace that to the tasty treat. The direct labor. Okay, well, all direct. We know when we make them keep up a little time card possibly that says when they're working and when they're not, maybe what area they're working in. So we can trace that direct labor to the tasty treat. Those costs are easy enough. But what about the electricity in the factory, the supervisor, the factory security guard? Well, those costs we can't easily trace to the tasty treat. Those are indirect costs. And in terms of manufacturing, we call those manufacturing overhead. That's the supporting cast for our tasty treats. Manufacturing overhead is still part of the product cost. Still going into it. Unlike those period expenses that are not part of the product. So we got to go through here. Selling administrative office rent. Well, that's not related to the product. It's related to general services of the company. So that is a period expense. Commissions. Well, commissions are what we pay that sales team after the fact, after they sell the tasty treat. They're not involved with the production. So again, that's a period expense, or we can also call these S&A expenses. Well, sales revenue. I don't have to explain that. I'm helping. Salaries administrative. Well, this is the staff that's helping support general business. So again, that's an S&A expense. Sales rep salaries. Again, they're involved in selling, not in making the tasty treats. Well, security services manufacturing facility. The security guard that watches to make sure that estranged spouses don't come in to harass the direct labor workers. Their job is to create a safe environment for the tasty treats to be manufactured. That's a supporting role. That's a supporting role in the production of the cookies. And what's going to help you figure that out, at least in here, well, it's going to say something to do with production or manufacturing facility. How do you figure it out in the real world? Well, you call somebody up, hey, so where does the security guard work? They say, well, he works in front of the factory. Okay, well, that's security services manufacturing. So that is manufacturing overhead. Product inspector salary. Well, yes, the product inspector every now and then will touch a tasty treat. I'm assuming he probably eats the tasty treats as inspected. But the product inspector doesn't handle every cookie or every brownie, whatever he's tasting. So what's going to happen is maybe every 100 cookies the product inspector takes. Well, so that's not a direct labor role. That's a indirect labor role. So indirect labor, supporting staff, making sure the cookies are edible, doesn't handle every cookie, but is involved in supporting the production. The accounting department. We like to think they're number one important piece of that should be headlines, we're number one. But it's related to general services. So it's going to be S&A. They're not involved in actually making the cookie or supporting anything making the cookie. They're supporting the business. So the idea here is you kind of got to separate out the product versus the business as a whole. These product costs related to a subset of the business as a whole. The business would be something like, say, Procter & Gamble. They have many different products. The accounting team at Procter & Gamble supports Procter & Gamble. There may be one accountant that is in charge of the paper towel division, but in general, they are Procter & Gamble's accountants. They don't work in the factory. So the overhead items are directly related to the paper towel production, and in this case, the tasty treat production. So production supervisors, he's supervising the production, so that's overhead. Income taxes all have to do with our income statement that we'll deal with later. So these are just income statement items. We'll later on Tuesday show how that fits in, how all our stuff fits in with the financial reports. But property taxes that are related to the plant, those are related to the product. Property taxes on the plant are overhead. So when you pay that property tax bill, it doesn't immediately show up as an expense. It shows up as a product cost. It shows up as an asset until that cookie is sold. Alright, I'm going to talk a little bit here about freight. Now, this part of our performing of trying to figure out what the cost is of these items eventually flows to financial statements that are regulated by GAAP. This is one rule we kind of have to follow. Though internally for decisions, we can change our mind how we want to do this. But if we're going to be preparing the report so that the financial accountant can do cost of goods sold, how we handle freight in? Freight in on the item, you take intermediate, you should pick this up at some point. That freight in on inventory becomes part of the inventory cost. Well, freight in then is going to go part of our direct labor costs, or not direct labor, direct material costs. So it's going to go up here with these pieces. There with added to the direct materials balances. Freight out, on the other hand, is considered a selling cost. It's a cost of sales. Not to be confused with cost of goods sold. It's the cost related to actually selling the item. It's a distribution cost. So freight out is a selling and administrative expense. So as soon as you have to pay freight out, you recognize the expense. It doesn't become part of the product. Internally, though, when we're going to start doing decision making, we're going to want to consider that. Because that's obviously going to have some sort of role. As we produce more tasty treats, our freight out costs are going to go up. There's probably going to be some sort of mixed cost that we're going to have to consider. But externally, they tell us it's not part of the product cost. So since we're helping out right now the financial people, we're going to call that S&A. Electricity for the plant, related to the plant, it's overhead. Supplies used, administrative office, it's related to S&A. Indirect materials manufacturing. The key here says manufacturing. This is going to be supplies that you use in the factory, like paper towel, cleanup supplies within the factory and that sort of thing. They're not the sugar and the flour you're putting directly in the cookies, but they are materials that you're using to help with production. Maintenance on the manufacturing equipment, overhead. Additional indirect labor, whatever that may be, overhead. Janitorial services, administrative office. The people that clean up the administrative offices, well, that's S&A. It's period expense. Leased equipment on the office, that's S&A. Plant and equipment rent. So the rent on the plant and the equipment, well, that's going to be overhead. These are going to help us determine finished goods later. Depreciation. We never call it depreciation cost, we always call it depreciation expense. That's just the name of it. Yes, depreciation expense, administrative office, well, yeah, that is definitely a period expense. It's like the administrative office. Don't get confused when it says depreciation expense. Plant and equipment, even though that expense term is there, it's still part of the product cost. It's depreciation expense is just the name. It's one of those things that I guess the accounting culture has caused us that we never call it depreciation cost. We always call it depreciation expense. Depreciation expense on the plant equipment is still part of overhead. Of course, that's going to be one of those non-cash, immediate things. But we'll talk about that later in the budget. And then finally, these two are just going to be work in process pieces that we'll need for later on. All right. So we have these costs. Costs behave. Commissions, I'm assuming, we're basing on how many treats are sold. So as we sell more treats, commissions go up. That means they're variable costs. Some of these others, our depreciation expense, well, that's going to remain constant no matter how many tasty treats we produce. Still going to have the same amount of depreciation expense. So that one's going to be fixed. Now, more along the lines of electricity, that's probably going to be that'd be a mixed cost. There's going to be some sort of fee that the electric company discharges for us to have that meter. Plus, as we make more cookies, we run the machines more, so we use more electricity. So it's going to be a mixed cost. We'll also find electricity has this other problem, is that how do we arrange it with the cookies when it's summer and we run the air conditioner more and electricity cost goes up versus those days that we make the cookies when we don't have to run the air conditioner. So we'll deal with that later. And we also know then that these costs are categorized differently. Some costs are related to the product, either direct material, direct labor, and overhead, and those costs are an asset until that product is sold. So we have to pick out those pieces separately and understand them, because they're going to flow through our cost flows. And don't worry, you're going to be seeing this a lot more later if you didn't get it today. This is kind of more or less introductory. And there's some costs that are just related to the general business activities. And those then are expenses in the period in which they're incurred. The first step is to figure out the pieces here. So, yes?
Is R&D a period cost?
R&D would be a period cost, but internally we would want to look at that differently. We'll get to that in later chapters, but yeah. For what we're trying to do right now is establish how we get to that income statement, what pieces that we put together for that income statement. Yeah, R&D is just going to recognize